Hi, Jonathan York, Bay Financial Partners, looking at the investment markets. Recent PMI data from the US was still slightly constructive out there, above 50, coming in at 51.7 versus 51.3 expected. Services were 55.1 versus 54.8. So again, encouraging news. You've got an expanding economy. Any figures above 50 is for an expanding economy out there, and really still showing that the US is pushing on at an okay rate. Now this week we get further evidence of the inflation data. That's coming in with the Fed's preferred inflation reading of personal consumption expenditure. And if that's still a pretty benign figure, running around sort of 2.7, 2.8, maybe a little bit lower than that, then potentially, the Fed's still looking at a rate cut towards the end of the year. But interesting, US equities are on the longest sort of winning streak since the global financial crisis of not seeing a 2% sell-off. So interest rates holding in there. 10-year is 4.23. The 2-year is 4.74. So really very little change out there, and coming into sort of month end, quarter end, there might just be a little bit of sort of dressing out there in terms of sort of rebalancing, etc. for indices. But then obviously next week going into a shortened week because of the big July the 4th holiday. Now it will be interesting this Thursday. You get the first presidential debate, Trump versus Biden. So obviously it's going to be pretty interesting to see how both candidates sort of handle it. A lot of criticism from the Republicans about Biden being, not really up to the job and sort of very dithery and sort of forgetful. But then potentially the same sort of accusations could be thrown at Trump as well. He seems to have gone off script quite a few times in recent presentations. And obviously still got the global conflicts out there. It's all got a little bit quiet on this sort of Gaza situation. They sort of instigated a sort of partial sort of ceasefire between sort of certain hours now, which is helping some of the relief aid get through. And obviously Russia and Ukraine is still sort of dragging on well over 800 days now, and Putin's really talking up his latest visit to North Korea with Kim Jong-un. But really all that was probably just trying to secure more weapons to help the sort of military campaign in Ukraine. Now oil's still above 80 bucks, currently trading at $80.80 and change. And again, it will just be interesting to see how it sort of transpires over what is traditionally sort of a big sort of driving months in the US, sort of July and August. Now in the UK, the authorities there seem to have got inflation under control. CPI is currently running around 2%. Will that be enough to see a rate cut? It's probably unlikely to see one before the election. Because also as well, the UK is sort of experiencing the Taylor Swift effect at present, which potentially pushes about $1 billion into the UK economy. But also as well, obviously in the UK, entering the final sort of week of the election campaigning. The election there is July the 4th. And on current polls, it looks like Labour will win a pretty comfortable majority. Now in the EU region, after the sort of rate cut from the ECB, markets are then looking to see when the next cut is going to be. But at present, the EU's got a little bit of a stoush with China on sort of EVs. Also as well, watching quite closely the election in France as well, because potentially a further swing to the right there could be pretty interesting for the sort of global and sort of political landscape. Now in Australia, the latest CPI data will be out very soon. That's expected to show potentially a small increase there from 3.6, maybe 3.7 coming in this month. Will that be enough to see the Reserve Bank change its interest rate policy? It's unlikely. Because really you'd have to get a reading probably above 4% for the RBA to be looking at hiking rates at its next meeting. Now here in New Zealand, there was a bit of a surprise on the latest GDP data. That came in at plus 0.2 for the March quarter, which was a bit of a surprise because most analysts were expecting a negative number or flat. So while potentially New Zealand comes out of recession, it's really nothing to get sort of too excited about, because year on year, you're still only looking at about plus 0.3 growth, which is obviously pretty anemic. Now, obviously, what many New Zealanders will be looking forward to is the sort of increased tax brackets that come into effect at the end of July. So it will be interesting to see how the New Zealand economy performs over the next sort of 3 to 4 months, because certainly that sort of middle income New Zealanders will benefit a little bit from the tax changes. And that's got to be good news. But obviously with the economy, really sort of stagnating, really, a very small sort of positive growth numbers, there will be a little bit of pressure on the Reserve Bank to be looking at interest rates to try and sort of ease the pressure out there and help stimulate the economy. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.